Very good morning and welcome to the RANsquawk European rundown for today, Friday the 12th of November. We've just gone through 10:30 now here in London, a quick check round the markets. And firstly, taking a look at what happened in Asia, where we saw a very aggressive sell-off in the Shanghai Composite, which closed down over 5%, coming on the back of speculation of further interest rate rises, which could come this weekend. And that coming on the coattails of that hike we saw on the reserve requirement ratio just around 2 days ago. That as well, coupled with various other comments in further, they may tighten their policy requirements on mortgages and housing properties going forward, did contribute to that aggressive sell-off, so equity markets in Europe have opened quite substantially lower. In particular, basic materials are underperforming. That's with quite a sell-off seen in WTI crude futures, already down $2, and spot gold down heavily on the back of that Chinese movement and news flow. Taking a look though in terms of the focus for this morning, it still very much remains on the sovereign front in terms of the Irish and also Portuguese situation. The latest we've seen though was that EU leaders in the G20 meetings in Korea, they've reiterated holders of outstanding bonds would not be forced to take losses on any debt restructuring, and if that was to take place it wouldn't happen till around mid-2013. So a bit of a backtrack from what the likes of Germany and Angela Merkel and also Sarkozy in France have been calling for, and as such we have seen a bit of a risk reversal in the bond markets. The actual Irish over Bund 10-year bond yield spread has tightened very aggressively around 40 basis points, and the likes of Portugal are tight up around 10, as too are Greece on the back of those news stories. Nevertheless though, focus still remains very much on Ireland, and some sort of resolution, whether we'll get that today, still remains yet to be seen. We'll be keeping a close eye out for any commentary. The euro overall is trading a little weaker across the board. We've seen the Eurozone Q3 advanced GDP broadly in line with expectations, although we were very weak on and negative on the month-to-month, quarter-on-quarter print, I should say, for the industrial production numbers. Looking forward then in terms of the US calendar and what's to come, no major 130s today, but we will have the Michigan prelim report for the month of November, and we'll also be looking out for a New York Fed outright Treasury coupon purchase today, targeting November 2014 to April 2016 maturities. That concludes the European wrap-up, so we'll have another update to come at the European cash equity close. That's all from me for the time being, so I wish you all a great trading day.